morning. You hear me? Thank you, Paya. Back in 1 minute.
Risk disclosure statement, dealing with risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategy, chat rooms, websites, and any associated websites or digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that loss is made limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment in Wholesale Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservations. Please trade responsibly. Commodity futures trading condition, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation of CA made at any accountable is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these traits have not actually been executed, the hypothetical results may have or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to implementation of any specific trading program which cannot be fully accounted for in simulated trading or in preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
Alrighty. So crude, I just got short. I posted this in the room. This buy ice up here was right at the red lug. We'll go over that here in a second. See all this liquidity down here. It's confluent with baby lug. I think that's where we're headed first. So you can see we try to get inside this prior market profile composite. Just from over here, beginning of March. You can see this is still an important area. I know we traded through this thing, or got a couple days through it, but important here to where we closed. Important here, couldn't get up in it. Now here's another attempt, try to get in it, back down here. So I took that aggressively because we were pretty much right at the red lug. We tested it a couple times here. Here was your ice. I took it aggressively. Technically, it wasn't right on the lug, but with all these attempts, and it was close enough that I took it. Very good chance we come back and retest it. So you might have another chance to get short if you didn't get short aggressively. But I'm watching number one down here. You can see this held, baby lug, extreme standard deviation. And it looks like it's the top of yesterday's value area. Again, I don't trade it's right there, right? So I don't trade the daily value areas. I mean, I pay attention to them, but they're not as important as composite value areas, right? When days are merged, but when you get confluence of all of this stuff, that's something you want to pay attention to. So if you are short, you really, really want to consider getting out of at least part of your position there. So that's that. This actually looks bullish for now. So we talked about this at length yesterday. So you can see that liquidity is at the bottom of this. So I can see us hitting this and then doing that. We talked about this yesterday, how we had a failed breakdown. Well, we didn't have a failed breakdown yesterday. I said to watch this at this high volume node, and we just built balance yesterday, and then we just broke out, and now we're coming back to it. So we should do this. If we do this, this thing is in big trouble. Right? So we were talking about what should happen, what does happen, what doesn't happen, right? So for instance, this balance area, we talked about this yesterday, but it's good to go over again. Broke down, retested, it should hold what? The bottom or high volume node, and then continue lower. That's exactly what happened. This one broke down, we had a failed breakout. So what should happen? This thing should rip. Instead, we just built balance. That should have signaled right there, something's wrong, this thing's not going up. This should have went straight up. Instead, we built balance and then broke down from there, broke down, retested, died. And then here, broke down, and I said yesterday, watch this, because if this does this again, you could expect this. Well, we are up here, so this is short-term bullish, but if this needs to hold, that baby lug and the top of this maximum volume node of this, if this gets through here, this is going to be a fail breakout, and this is coming down to this stuff. So we're already down to 88. I mean, this isn't much further down to this baby lug. I'm sure there's no way it's going straight there because crude just doesn't do that. It's kind of play games for hours, but I will be watching. You know we're going down there, right? Because of this, right? So when you look at areas and you see all this confluence and then you see liquidity there, that is, you just sit in your trade, right? You don't even question, you know, the odds of us hitting this are very, very high. So it might do this first because it's crude, but I would expect that. And then once this all gets filled, again, that balance area I just showed you is basically right here. That's the top of it. So we could fill all this. These guys get their fills, they get long, and then we go up. So that's why I said it looks short for right now, but I could see it filling that and then ripping. Another market in an important area, gold. So failed to tag red or blue, failed to tag blue, failed to tag blue. That's telling you something's up. Came up here, got to the yellow lug, which is top of this. This is like four or 5 day composite. Let's see here. Yeah, this was literally since 3:30. So yesterday had to, if you look at yesterday's trade, separate this. We had trouble. This is this new composite's with this day, but we still had trouble getting out yesterday when this was like this. We could not get out of here. Now what I did, came up here, came down here, and closed right in the middle. And then I merged this one. Now here's yours. And once again, you're having trouble. You had your stop run right here. And at yellow lug, and there is a little bit of a divergence in volume, right? Like you could see we're up probably positive 750-ish delta, meaning there were more buyers than sellers, more aggressive. There's never more buyers than sellers, right? There has to be an equal amount, but just at different prices. The point is there were more aggressive. This is showing you, cumulative delta shows you the aggressor. So the aggressor was the buyer, here, and then we make a much higher high, 60 ticks higher, and there's a divergence. It's not huge, but I'm going to show you something in crude yesterday, which could have kept you out of a losing trade that I actually put on because I just noticed it after the fact. But anyway, pay attention to that. So that just bolsters the case that this is probably going to hold. So you get all this information, and then you get your real-time information, which is the volume, which is the most important, real-time volume. Here's your stop run. Here's your zone. Looks like we're going to retest, which I demand anyway at the yellow lug. So this is definitely ATR. ATR is 19.4. We got 30 ticks below here. Here's your retest. If this fails, I'm going short. I just showed you 4 or 5 different things that shows short. And then here's another. This is the most important. You had, is this real buying or is this someone puking? That's a puke. That's a Dumb and Dumber, right? You want to see real buying. Yeah, that's buying, but this is the advantage of having this information. You know these aren't real buyers. This is someone who just had to puke. That's not someone that's initiating longs, right? Doesn't mean it can't do this. That's why we wait for retest to fail. So if this retest fails, I will be shorting this as well. Again, for crude, I'll go, or, for these other markets, I go within 2 ticks. This did not get within 2 ticks. It got 4. It doesn't, like I say every day, it doesn't have to retest the zone, but that's how I play this. If I miss this trade, those are my rules and follow my rules, right? It doesn't always retest, but gold and crude are probably a close tied for number 1 to retest the area and then go. There's your retest right there. So what do we do next? Find the ATR 19.9. You put it in your little high-tech spreadsheet. I've moved to 85% of an ATR. Keep inching up so I don't get stopped at the tick. That's 16.91. That's 17 ticks is 85%. So then I go 17 ticks below here, puts me at 84. So then what I'm supposed to do, so 80% of an ATR, so 17 ticks to enter, I need to be 17 ticks above the zone. For my stop, that's 34 ticks. And then you take the size of the zone, which is another 11. That's 45 ticks that I'm total risk on that trade. So then I come to my risk calculator. And I go to GC and I say, okay, if I'm risking 45 ticks, how many can I put on? I can put on 6 contracts. So I can put on, again, this is all over the room. You can go to pin messages, resources, you put in your risk. So I have this set up for my auto trader that I'm trading micros on that, the auto trader program that I'm doing. So I'm just basing it on that because it's pretty similar. So again, the auto trader is based on a $12,000 account, and this is the profit so far this year. So I'm risking 2% on a trade, means $2,500, and or micros means $253. So if you're trading micros, you can put on 6 micros. Right. So there's 6. That's 84. One second, I've got about 14 accounts that I have to do squares in. All right. Now remember, it's a retest failure. If this just does this, then this is disqualified as a short. If it gets 20.
Gold stock by GC, 239 contracts.
All right, so now we got to readjust because this is a new setup. Cancel that. I got to go back and cancel all these working orders. Hold on a second. It's not going to be that much difference in price, but it's definitely a difference, right? So now I'm going to draw this, and hopefully it'll wait for me. Well, either way, I'm waiting for a retest failure, so I'm going to just get that out of there because it's right around the same area. This is the newest one here. So now I get to start the process all over. We're at the yellow lug. So you could, I mean, if you want to be aggressive here for all the stuff that I showed you, that's probably not the worst idea, where you can take this aggressively out of here now, since we just saw the retest failure of the first stop zone. Here's another one. I'm going to wait for retest failure of this one. Right? So then we'll do the whole process again. If we get a full 21 ticks away from here, that's an ATR right now, retest failure, then I'll do the whole process again. So keep an eye on that. There's just playing games as usual. Just go down and fill this liquidity because we know what's going to happen. Just get it over with so I can get out of my trade would be great. All right, and then equities. So you guys follow everything that I just did there. You understand the ATR. You understand what I'm doing with the ATR. You understand the stuff I talked about here. Any questions? Ask them. You're not going to embarrass yourself if you don't know what you're talking about. Just ask questions. And again, if you ask the same questions 40 times, then yeah, then that's pretty embarrassing. But there's no dumb question. If you don't understand what a market profile composite is, if you don't understand any of this stuff, ask. That's why you're paying to be in the room, right? And there's always someone in here that's willing to help you. There's very capable traders in here that can help you as well. So utilize the room to learn. That's why you're in here, not to be secret squirrel, not talking, not participating. The guys that are participating are the guys that are making money, guys and girls. People that sit there secret squirrel, afraid to ask, afraid to post up. Those are the people that never make money. So which one do you want to be? All right, so equities. All right, so yesterday, this is ES. Talked about this close right here, and once again, failed to get out of there. This is also telling, right? Build new lugs. What should it do? It should hold prior red directional. It should hold directional yellow. The worst case scenario, it should hold prior red. It didn't either. Didn't either there. Failed to get out of here. And we're right here. We're probably gonna open up right here. So you wanna watch at the open. Are we gonna get out of this or are we gonna do that? Right? These are just these individual days here. I just want to, it's good to spread out these days to help you with your story, right? To see how the market reacted. You can see we broke out of this, got in this, right through this, into this, closed here. Next day, tried to get out, no dice, tested this, came back, closed right here. Yesterday, got back in here. This is the tendency. We talk about this all the time. If you accept in a composite value area, the tendency is to get to the other side. That's exactly what happened. Closed right there. Now we're smack dab in the middle. But you can start to draw some conclusions with the mighty lugs, right? This is telling you that we're probably coming down here, and that's pretty much right at the bottom here. So what's going to happen at the blue lug? Are we going to hold and do that, or are we going to break down? And you go to your longer term stuff, structure. This looks bullish right now. This should, that's the balance area for less. Basically yesterday, broke out. Where did it stop though? Anyone tell me? We talked about this yesterday. Why is it important where this stopped or where we closed yesterday? And it looks like it's failing. Hey, look, the two guys that participate. There you go. The two teachers' pets. Exactly. That's where that started. That's important. There's a reason this happened. You want to always pay attention to these areas on retests because there's a very, very good chance that does that again. If it gets above there, that tells you something as well, right? This is an 80-point move from here to here that started right at this price, and that's why we struggled to get through it so far. If it gets through it, then we're coming back up here, this area. So you have all that in mind, you know your areas, and then you wait to see what the real-time volume is telling you to do. Simple, not easy, but simple. When you break it down like that, then you're not like confused and, well, I don't know what to do. I'm afraid to hold on to this trade, so on and so forth. There's NASDAQ. This looks a little different as far as this stuff. This was directional connection. Remember the other day I even said, because I remember I went golfing on that day, of course, missed the huge down move because that's how I roll. But I said NASDAQ didn't really sell. I mean, it sold off a couple hundred points, but comparative to ES, it was nothing. Well, what did we do in NASDAQ? We went right through this area yesterday, right? It struggled a little bit for a little while, and then went right through it. So that's information. And right now,
NQI Iceberg sell NQ, 151 contracts.
Right on Q. So that's that. I gotta get everything set up here. But profile wise, look where we're at. Important area. This should hold this, right? We never tag this. If this gets out of here, then you're expecting down here. All right, so I'm gonna draw this zone. I'm not so worried about trading it like yesterday. Yes, I got smoked trading that zone before the open. Yeah, I'm not gonna draw it. It's only 140. I'll just wait for something new. Let's get our water border out, rolling. We'll take strike action. All right, so gold is, so again, if you understand these zones, you stay out of that short so far, right? We were waiting because of the yellow lug. We were waiting for retest failure. Well, it didn't fail. We're still waiting for, as long as this doesn't get an ATR above here, I'll still short this thing. I mean, I need to see retest fail, but the point is you don't get in that trade yet. And then you got a new setup. So you just sit back and wait. All right, here we go with the straight up move. The stack. It's 15.
Gold stock by GC, 204 contracts.
There you go. So
Gold Iceberg sell GC, 152 contracts.
this looks like a double whammy. But because we were bouncing around that lug, I never took this aggressively, either one of these. Well, this one never even got below your 80%, but I didn't take the first one because my strategy with the lugs. Right, so now you got so it's 174. It's close. Double whammy is this is definitely threshold. This is still coming in, and there you go, 150. So this is a double whammy. What's a double whammy? Dumb money puke into the waiting hands of the big money, the sell ice, the hidden orders. You know, I trade these zones equally as far as the concept, but double whammies are probably the most powerful,
You can trust the 300% over
most powerful setups, right? It's just common sense. You have pukes that's not real buying into the big money that wants to sell. It's just common sense, right? As far as why that would be
Soybean
so
ice
stronger.
sells ES 150 for contracts.
This is not right. Let's move this with our 1982 drawing tool. I think there were better drawing tools on Atari back then. All right, so that's that. Now we want to see, I think we're above the yellow lug now.
Stock by
All
GC,
right,
230
I was
contracts.
just gonna buy this thing aggressively, and there's another stop run. Lots of activity in gold today. All right, so we know we're above the yellow lug. We just blew through that double whammy. Here's another stop run. So I will buy this aggressively above. Basically started right here. Let's change this.
RTY Iceberg sell RT, 150 for contracts.
I guess everything's gonna fire off at one time. All right, so quickly. Every time I do this, it always colors the wrong zone. I mean, it's close enough, but the top one's supposed to be yellow, the bottom one's supposed to be blue. So anyway, 24 is the ATR. 20.4, so 21 ticks out of here, I'll go long. I don't think I can put out in 6 now, obviously. So 21 ticks puts me in 05. That's where I will go long that.
Soybean stock by ZS, 151 contracts.
Do not want to miss soybeans, some of the best trade out there. Sell ice there. Looks like I just missed a trade. Into this. I just had some stops.
Soybean Iceberg sells ES, 150 for contracts.
All right, so there, someone's selling this. I'll change this color in a second. So this is the most recent zone, so I'm trading off this. But it's good to know which way the big money's playing. Doesn't mean they're gonna be right, but so you got that. Now let's check our lugs. Almost close to the red lug. I won't short this aggressively, but it's good to know where we're at there. Still buying this thing. Now we're at baby lug. In the middle of nowhere as far as composites, right? So we talked about this yesterday. This thing is still very bearish overall. That doesn't mean you can't have rallies, but I did say there's a void here, and we could make it all the way back to where this huge directional conviction started. So this could do that. Doesn't mean it has to. It could just sit here and build balance and then die again, right? This is the main point. We did that. Try to come back. Try to recover.
Bond Iceberg by ZB, 500 to contracts.
So keep an eye on
NQ
this.
stock sell NQ, 198 contracts.
All right. That's definitely threshold. ATR in here is only 16. What is this? All right, so that's your stop zone. Below the yellow lug. Pretty important area, right? Right there. Below the yellow lug, like I said, this is supposed to hold prior red, yellow for heading up here. It's holding neither. And we're about to break down out of here, and you have a cell stop run. So if this turns into stop and hold, this is your next stop, most likely, which is right at the blue lug. So I will get in this aggressively because we're below the yellow lug, 16.14. It's 13.75, 13.71, so 13 3/4. So 14 puts me at 77.25, 77.50. So I will short this. Pretty sure I can put on 4. We'll check that. So as long as this doesn't get 16 points above here, I'm going to short this. If this does, then I'll consider retest failure to go long. So 98.50, what did I say? 16. That's 14. That's an ATR. All right, so that's canceled. So now I'll play retest failure and I'll go long. The lugs are saying bearish, but this is holding in here in this profile. That's bullish. And you had the sell stops. Again, not real selling. If the big money wanted to come in and push this, that was a chance. Where are they at? They're not here yet. So I'll play that retest failure. Again, I'm conservative because we're below the yellow lug. I was going to be aggressive to short this 80% of an ATR because we're below the yellow lug. If we're below it for a long, I need to see ATR retest failure. So 15.75 now. 85% of that's 13.38, so 13.5 points out of here. So 98.50, so that's 11, 11.50, 12. There's your retest. $15.12. All right, see if that holds. So that's that. I do not want to lose track of soybeans. Still in this latest zone. We know the red lug's right here. close. So I'm not going to buy that, right, until we form new lugs, but I'll sell it, but I'm not going to sell aggressively. Well, I mean, you could. It's pretty close. I mean, I just sold crude in that same situation, but crude we had tested a couple times. So you got to make a decision if you're going to get in aggressively or you wait for retest failure. ATR in here is 2.9. I'll be aggressive out of here. Spread log, this thing's overall bearish. So 2.5 points out of here, I'll short this. It's 29, basically. 26.5. All right, so if this gets an ATR below here, this is disqualified. And then we're waiting for a new setup. Disqualified as a long and a short because we already got an ATR above it. 91.50, ATR is 18. So that's 73 and needed a touch, didn't get down there. All right, I think we missed something in Russell. Let's take a look. Yeah, I'm not gonna draw that. I mean, it is threshold, 2 spikes, barely. But I'm not gonna play that one. You could draw it on these two. 70 and 97. It's this. I'll wait for more concentrated volume. Let's check. What are the other important things that we need to pay attention to? One, the edge. Make sure we're not like oversold or overbought or whatever. Either one, neither one. Right, we're right here. You can see the percentages here. Again, you guys can see the newer trades. You can see this on the
10 seconds.
squawk. Now we have a number coming out too.
$58.0, 58.0 low in forecast, 58.9. US market composite PMI 57.7, 57.7, low in the forecast of 58.5.
All right, so got lucky there. You don't want to have orders working in the numbers, period. But and many times things change, right? Like the number comes out and then paper decides to participate after the number. So, your setups pre-number aren't as strong. So you may want to, in the numbers, important numbers, which that one was, whatever that was, I saw early ISM. You'd want to usually delete your order. I'll take this trade, but it's not, there's new information in the market, right? So this stuff is not as reliable now. You're probably better off waiting for a new setup. But we'll give it a shot if it gets up there. So I can complain. I shouldn't have done that if I was wrong. So that's perfect. I've been known to complain. Crude, of course, just it's got to play its whipsaw games for 2 hours. Could have just went and filled these guys. And that's actually that's on them too. That's pretty weak, right? I told you when I was the big scalper, I would have a big order in there, and it would get close, I would just start stepping on the gas, and people would jump on my coattails and want to run right into my bid, and I'd be out. So boo on them for not being able to push that thing down. It's pretty weak, pretty pathetic, actually. Where's the manipulation when you need it? All right, and then soybeans yet, no fill here. Nothing in ES yet. We're right at that level. This is not threshold, but we're right at that directional conviction again, right? Do or die. Be nice to get a signal. Right, the yellow lug, right at the top of the profile. Pretty important area. Either way, get a bullish signal, I'm gonna do that. Get a bearish signal, I'm gonna do that. Let's see this. Let's get this out here. You wanna. Where's today? It's not today. There we go. So it's cumulative volume, again, just showing the aggressors, market order aggressors. Who's winning, who's losing. It's pretty benign, 0. All right. It's looking promising there for a little bit. Where is NQ? Still holding. What happened with gold? I forgot about gold. Nothing. Still sitting in the zone. So again, I'm going to go aggressively. I'll go long aggressively because we're above the yellow lug, 80% of an ATR. Let's make sure this is correct. You do want to change this as this changed. From this, the whole point of using this, right? This is a dynamic way to trade the volatility. Again, I had a mentoring session yesterday, and the guy was trying to understand ATR or why I'm using it. And I said, I used to when I first started, you know, with the zones and the SI indicator and the cores, it was just a standard amount of ticks, right? So I would judge the area because you don't know what this is until it breaks out of here, right? You don't know, is this a Dumb and Dumber? Is this a stop and hold? You don't know until it gets out of the area. So the way I would judge that was I just had a standard amount. So crude and gold were 10 ticks. NASDAQ was 10 points. At the time, those were fine. But that's not indicative of, you know, every day that how the volatility changes. So that's when I moved to the ATR to determine what the setup is. So when you get, if our market's able to move a full ATR away, a 5-minute ATR away from the area, that helps you determine who's winning, who's losing, right? So that's why I switched to ATR. And then the 80% is just what I determined over, or it was 75. You guys have seen it keep getting filled to the tick and then it rips. So we moved it to 80, same, moved it to 85. But that's just a way to not have to risk the full 8, because if it, you know, if it goes in ATR, retest fail, you shouldn't have to, you know, it shouldn't be an ATR where you have to get in, you know, you can even get in lower than that, but I just determined, you know, 80%, 75, 80% is a good, you could wait for another full ATR. That's the way I trade it, right? If you come up with better methods, trade them and share them. But that, again, this is from watching thousands of these over the last 3 years. That's the best way I've determined to trade, to determine if they're what they are and the best way to trade them. Even though it's not the best way because I keep getting filled to the exact tick, which is really, really, really annoying. All right, so this long is disqualified, right? Because we got a full ATR below the zone. That's done, which is fine. I wasn't real excited about putting that on post number anyway. So now we wait for a new setup. But we are cognizant of the fact that we just we're breaking down. We can't hold inside this composite. There's two things. We got in here yesterday, tried to get out, should have tagged the top, just like should have tagged the red or the blue that we talked about, right? Did not happen. Now we're out of it. Doesn't mean it can't get back in here, but we wait to see. Now we wait to see what the real-time volume is telling us. If it's bearish, that just bolsters our case that there's something up. Why didn't we go tag this? Why didn't it hold this morning? That's telling me we're coming down to at least here, if not lower. That's my thesis. I could change it based on the volume. So we wait to see what the volume tells us, because this is the most important piece. I don't know if I've ever said that, or 400 times a day. All right, so this is, yeah, this zone, I'm just gonna delete the zone. There's pre-number, we got an ATR above, ATR below, it's not important. The only way, actually I'll leave it in, the only way this is, you can possibly trade this zone later, if this leads into a big move, then if we come back here, you could trade that. Remember we talk about directional conviction, that's the only, otherwise I'm not trading this zone, I'm waiting for something new. Now we want to check our volume today too. Very, very important. So don't get algoed. It's not bad. It's not great. Remember the last couple of weeks, you'd see like yellow all at the open for the first hour. Not horrible, but it's not incredible. But at least we're over 100%. That just means 100% is normal, right? So that's a good thing. Same with, let's check crude and gold. Gold's not bad. Crude's turned into nothing. It looked promising here. And now you can't even get to 100%. So when you see this, you are going to get that, right? Until it probably breaks out of here or breaks down here. You're going to get that because of that. No one's participating except for the algos. Gold's okay. You have the spikes here, these spikes. Now it's kind of dying down too.
The US ISM data, non-manufacturing PMI forecasted at 58.5, previous 56.5, highest estimated forecast being 62, lowest estimated forecast being 55. US ISM non-manufacturing employment, previous 48.5, US ISM non-manufacturing new orders, previous 56.1, and the US ISM non-manufacturing prices paid, previous 83.1.
I love how if you look at that Squawk channel, there's 3 different guys talking to you from the Fed. Like what, I don't understand what is going on. Like, why do they talk every day now? I mean, I just never remember. Look at this. So this is my time, by the way. So it's 2 hours. So it's 9 o'clock Central, Brainerd, 11 o'clock daily, 1 o'clock. Wait, like, what is this? Am I imagining this? Like it's every day lately. Why do they talk 3 times a day? I don't get it. If you're going to talk 3 times a day, then what's the point of having the meetings? I mean, am I missing something? Do you guys know what? I don't know what that is. I don't know. I've never seen that until this year. Maybe they all have to get their positions on and they're I don't know. Really weird. So just be aware of that because the market does react to that lately. Big time. Once again, selling tail, directional conviction. Selling tail, having trouble getting through there. Could see that. 0. Russell. Talked about this yesterday. This is the main guy. They'll break out. Tried to hold, no dice, died. This is the last couple months. Still bullish, but it's really not doing much. This starts to fail these balance areas, these smaller ones, first and foremost. If it gets through that, see how it held? If that gets through that, then you want to watch this one. If it gets through that, 0. This again, this is a daily chart, so I'm not saying that's all happened in a day, but here's the hourly. So this still looks bullish, right? For the time being. Here's your balance, balance on top of balance, broke out, retested what? High volume node, held. This should do that, right? Should. If that doesn't happen, that is telling you we are going to have a sell-off at least to this. And that's a pretty decent move. All right, soybeans is still sitting here. Again, I'm not buying this until we build new lugs, but I will sell it aggressively. ATR is 3.16. I'm not getting ATR above here yet, so I still can short it. Well, there was something in bonds earlier. Take a look at that. All right, everything was looking so promising, and now there's nothing. There's bonds, 600. This is the only market that's changed since my course, as far as which is pretty incredible. I made a course 2 years ago, so I have 250 as a threshold in here. I would up it to 500 for tradable areas.
1 minute to go now.
You can see this is one house.
ISM non-manufacturing PMI first.
Wait, what? I didn't. Well, this is ISM now. What was the other number? So this is saying, this is getting confused. So this, I guess this is the first one. It's market services PMI, and then non-manufacturing prices paid. So this is a bigger one. New orders. So it's good we don't have a position on into that anyway. All right, let's get some fireworks, please.
10 seconds.
So the ATR on bonds, by the way, if you want to trade that, we may trade it as 11.7. So you see 11 ticks out of here. We'll check the logs here in a second.
58.3, 58.3 lower than the forecast at 58.5. US ISM non-manufacturing prices paid 83.8, 83.8. US ISM non-manufacturing new orders 60.1, 60.1. Non-manufacturing employment index 54.0, 54.0.
All right, a whole bunch of nothing again. Remember how pathetic that we were talking about yesterday, how pathetic that volume was on the move up yesterday, right? That doesn't mean we can't go higher. It's just something to keep in mind. If you start seeing the big money, the big volume pick up to the downside, that's telling you we're going much lower because the rallies are in low volume and then the sell-offs are high volume. Let's take a look at the lugs for bonds. By the way, you newer traders, you can access this page. Just go to just go down here to this news squawk. I can't believe there's only 3 people in here. Like, do you guys not want to know the news or watch the edge? Like, take advantage of this. Bonds, blue lug. And you can see this is confirming Even this rally was a divergence. Again, you gotta be very careful in the middle of nowhere with this, but it's something you wanna keep an eye on. Right. Definitely selling it aggressively. So technically you could buy this.
RTYI Ciceford by RT, 151 contracts.
You know, if this doesn't get an ATR below here, we're at the, bounced off the blue lug. Actually, that's down here. I take that back. Blue lug was down here. So we're below the yellow lug. So I would need to see retest fail to buy it. And I'm not going to short it because the red lug, the blue lug's right here. If we break down and then we build new lugs, then I'll look for a setup to short it.
The USI Centre Services PMI March 2024 report is now available on the financial community recovery.
You can draw this zone. This wasn't threshold, but you got this and this. This puts you at about 180. Remember, threshold's 150 for Russell, and it's still coming in here. I may have to adjust that, but trying to incorporate these three spikes. It's pretty close. Yeah, that's right. Maybe a tad higher. All right, this trade's still living. ATR's 24. I may have to adjust this. 4.1, 85% is 20.4. It's 21 ticks above here. Puts me at 04. You go one tick lower.
Comments come through from Fed Brainard now, since the Fed will tighten monetary policy methodologically. Through a series of rate hikes, starting to reduce the balance sheet to a rapid pace as soon as the May meeting. She says that I am carefully monitoring the extent of rotation from demand for goods back to services, whether the service sector can absorb without sparking inflation pressure. Brainard goes on to say that longer-term inflation expectations remain within the historical.
Here we go.
And I
Crude.
watched the yield curve and other data for suggestions of increased downside risk.
You never did get the retest though.
Fed Brainard
So this,
saying that Russia's invasion of Ukraine.
Brainard's speaking now, great. Like I said, you know, I did this aggressively because we're below the lug. You could say, I want to be conservative, but sometimes you don't get the retest. And then you're kicking yourself that you didn't get in. Right? So you got to determine how you're going to trade these. Again, I have a process. If we're below the yellow lug, I take them aggressively. If we're above them, if I want to go short, I need to see that. Sometimes you don't get that. And then you say, oh my God, that just cost me so much money. But that's happened sometimes. You got to come up with a consistent plan. If you don't have a consistent plan, you're not going to be consistent. You're trading against algos that are 80 to 90% of the market. They have consistent plans. They don't change because of their feelings, right?
NQ stop sell NQ, 160 contracts.
So that's bolstering our break out of that composite, go lower case. Not seeing it though. I mean, I'll just wait. Plus, I know we're close to that prior composite too. We want to see what happens here, because if this gets inside this, then it's going to be go time. Right here. It's only 20 points lower. Not even. Again, we have traded through this a few times, but I still think it's relevant, so we'll keep it for now. It was pretty close to this point of control here. Pretty close to the close that day, so we'll keep it for now. Coming close to blue lug too.
Crude stop sell CL,
Hey, look at that.
230 contract.
Hey, look. You guys ever see this? You ever see liquidity get filled before? Who knew? Oh, I did. It's fixed. not fixed, but you guys know what I mean. So like I tell you guys every day, right? The traders that don't know what's going on, they complain that the market's manipulated, because it is. But if you know what they're doing, if you can't beat them, join them. It's as simple as that. So you can sit there and complain and huff and puff that it's manipulated, or you can enjoy the manipulation and join them. Again, it's 100% manipulated because I used to manipulate it. So I know it's manipulated, and I watch other guys manipulate it all day, every day. It's just one big game. If you have this stuff, you know the game. I can't tell you the edge you guys have. Like, you don't understand. Some of you do, but some of you, most of you don't. Yet, I will come back to that. They're pounding these stocks now. So this is obviously Brainerd's causing this death move.
So also seeing a small little bit downside movement there. Where I've got
So I didn't draw that zone, but you could have taken that aggressively. I mean, granted, I wouldn't even have taken that aggressively because we're so close to the blue lug. But now this is going to be interesting. What happens here?
Meanwhile, the Treasury taking the yield is in highs of the day after those very high highs.
There you go. So if I get a bullish signal, I will go long that aggressively because of the blue lug. And we'll probably pop back out of this guy. If we build new lugs and I get a short signal, then I'll go short. So you guys see why you want to know these areas on the chart. How many guys bought in this area?
Bondi Iceberg sells EV, 505 contracts.
You, the astute traders you are, said, I'm not touching that long until we can show we can get above there. And that even if you didn't take a trade there, even if you didn't short it because there was nothing to short, hopefully you didn't go long because of what we talked about.
So really here is the US 2057 basis.
Stay hot, Brainerd.
And Gazprom Germania here says that we need to stop using Gazprom brand from Russian phone.
Should I forget to get out of useful in a second. So the way I'll do this, let's see where we're at on the lugs. Because we have a new setup now, right? Now I can trail my stop based on that new setup.
Nat Gas Iceberg by NG, 150 contracts.
So I would have gotten out of the baby lug, but we blew right through there. So now all I'm going to do is play the zone to trail my stop. 42.4 is the ATR. 36 ticks, 3604, so let's say 37. Puts me at 91. That's where I'll stop it. All of them, right? So you can find certain areas to get out of trades as long as you're consistent, which I do many times if it's confluent, right? So I was going to get out of this at this baby lug because it was confluent with extreme standard deviation of EWAP. That's where I'll get out of baby lugs, the minor lugs, right? I just wasn't, I mean, it blew through there, so I didn't do it. But if I see an opposing volume setup, a bullish, I'm out of everything. Hold anything at that point. That or major lugs. I'm out of everything. You can see this is right at yesterday's value area high too. The other thing you want to note to determine if this is going to be a hugger where it hugs the standard deviation and smokes the algos that play the reversion to the mean, keep an eye on your volume. It's not bad. It's not great. Remember, most of this is the stop run, but it's definitely over normal. If this stays like this, you can bet we're going to do that. That could be another reason you get out. Extreme standard deviation, low volume. Actually, that's why I'm going to get out of one here. I just missed this part of this, but for that exact reason. I should have been out down here watching that closely the volume sucks. You think that if there's no paper, there's no big money to push this, these algos, reversion algos are gonna snap this thing right back, right? But you've got to be consistent. You can't one day do one thing, another day do another thing. You're not going to make money.
Question that combination policy has to be removed.
All right, not one signal in ES so far. Pay attention to this. It's pretty close to that.
As George answered, that the 50 basis points will be the option that we have to consider. That's George there saying 50 basis points is an option that we have to consider.
If this holds, I'll still go long. To short it, I need to see new lugs and a new setup, and then I'll go short
George,
this.
as the FOMC has to be very deliberate and intentional.
Deliberate and intentional, like what you guys are doing right now to the market. After you got your shorts on. This area was definitely broken ice in Russell. I forgot to even look at this. I think we're above the yellow lug. So I wouldn't have shorted that aggressively anyway. Yeah. But you can see, let's see if this changed. I don't think so. This is one of her major things. If you get above or below the major lugs, red or blue, and it doesn't make new lugs and it gets back below, that's a huge sign. It didn't meet the conditions for new lugs, and then that leads to this. We've seen this like 10 times in the last week. There was no setup here, but you just keep that in mind when you do see the setup. The next time you see this and you get a setup, you're in and you're holding it to that or that. And why are we hugging this? See how we're hugging the standard deviation? Why are the algos not popping it back? Well, because of this. The big money's playing. Over 3 times on that, and you're still at 2 times normal. These reversion the algo means it's like this self-fulfilling like cycle feedback loop, right? These algos try to revert it, they get run over, they got to puke it. They try to revert it, they keep getting run over, they got to puke it. So it just adds to the fire, fuel to the fire. So you see the difference between this at extreme standard deviation versus crude. Look at the difference. That was the puke, and then we're really not getting any follow through, and that's why we bounced straight back. Stuff you really have to pay attention to if you like making money. And that's why we did this.
S&P stock sell ES.
Hey,
One stock sell ES 1,003 contracts.
what the? And all those guys, that's why you saw no setups, because everyone was holding their breath. Time to puke them. But this is blue lug, right? This might be go time on the buy side. Again, a lot of times these stop runs, they'll start here and then you'll see the spike, but you can see the snake started there. So I'm going to use that as the top of the zone. That's step 1. You know we're at the blue lug. Right there. Market profile composite. That's 2 things in the favor of a potential bounce here. ATR is 6.12. So remember, I take longs aggressively off the lugs, blue lug. 5.2. So 5.25 out of here, out of the zone, I will take long. So it's 62.75. Pretty sure that's only going to be 3. Check that. That's that. Now I'm not going to short this setup potentially. So even if this turns into a stop and hold, right? Stop, run, big money comes in behind it. Until we can switch colors here, until we build new lugs. I do not mess with the lugs until we build new ones. We know how powerful they are. You see it every day, all markets.
Take a look at the Fiat Green Index now, it's 51 up 100.
And just look how good these composites work as well. Couldn't get inside that, got back in here, straight through it. This is an area where it could bounce though.
That's George said that we may have to apply new bring inflation down.
What do you see here? Anyone? Anyone? Bueller? Anyone? All right, if no one's gonna participate, then I'm hopping off. Seriously, I'm not, I can talk to myself all day long. And it would be nice if it wasn't the teacher's pets every time too. You guys, I'm telling you, the more you participate, the more it's gonna hammer into your head what's going on. Well, no, yeah, that's directional conviction, but what do you see here? What is that? It's not support. This is I mean, technically it's support. The fail breakout. This was balanced from yesterday. These are traders placing bets. All the longs think they have it, and then they tell, oh crap, gets to the high volume node, there's your stops, right? That is a fail breakout. There's nothing here. This thing could come all the way back down here. There's not meaning nothing to stop this thing as far as structure now, right? So everything that should have happened, happened. This is what we talk about. What should have happened? It should have held this. This was a meaningful area that caused an 80+ point move down. What did we do? We came back, it held it. What did we do? Fail break out of that. So everything is lining up like it should happen in normal market behavior, right? So again, there's not any structure here as far as balance areas, right?
As George says, supply
Things in trouble.
maybe popping-
Doesn't mean we can't do a bounce first. I'll still go long, but I'd be willing to bet the bigger move, even if we do a bounce, the bigger move coming up is going to be this way versus choppy, quick bounces this way because of everything that just happened. And that's how you form your thesis. And you don't even have to trade the other way. You can say this thing is bearish. Everything you just pointed out is bearish. I saw it too. I'm just looking for short setups. That's probably the best way to trade. Most traders can't do that because most traders want to catch every move both ways, which is, you know, again, if you have the volume information, it's fine to trade that way. That's how I trade. We're day traders, right?
We have to slow it down for the video.
But the best trades are going to be looking for shorts for moves into this and probably much lower. Because we talked about how this balance area was violated. So this is, you know, you don't pay attention to that anymore because we've already traded through it, but there's really nothing here until like down here. Spot gamma. Actually, first let's look at this. I don't know what these lines are. It's obviously not current. I know what you mean. I will look at the commentary too. He was basically saying that it looked bullish, but it was leaning. He was leaning bullish. But he said if we break 4,500, watch out. I'll show that here in a second.
Net gas iceberg by NG, 180 contracts.
Gas too. So this is somewhat interesting, and this is fine, right? As far as I'll buy it right here if we get a setup. I mean, if that stop run holds. Here's the options. There are buying, calls, selling, puts, total. Here's the, you can see that there. You just combine them here. Market price is down here. So many times, this isn't a huge divergence, but just keep it in mind. Let me just look at this stuff real quick. Make sure we're not ATR below here. 53, ATR 6.19. So that did not get an ATR below here yet. So this is still a valid long setup, potentially. As long as we don't build new lugs. Let's take a quick look at nat gas. This thing has been, you catch a trade in this thing, you're looking at 100, 200 ticks. So this is 150. You could draw that. I like closer to 200. This is the most algo-ridden market you're going to trade, so you want to see the big money in here. I'll come back to this, but you could draw that. It looks like it's broken ice, right? It looks like that's here. Here's your retest. I already missed the boat on that anyway, so it doesn't matter if I draw it or not. All right, so if this gets 6.25 points below here, that long setup is done. And I'm waiting for new lugs to potentially short. Bond aggressive would have been pretty good, of course. Trades on this are just layups. Yeah, that's pretty good. Oh, but we said we were at the blue lug though, right? I wouldn't have been aggressive there. Let's see. If I remember correctly, it feels like it was like 2 years ago. Yeah. New lugs. So now you could play, if we do retest that area, you could play that. Right? Well, you have a new setup here too. So what's this? 497, that's again 500's threshold. Let's draw that. So if you get retest failure of this zone, you could trade it. ATR is 16.5, so 17 ticks, that's half a point in bonds. That's a lot. But this definitely an ATR. You retest failure, 80%, 85% of 16.5, and you can short it. 14 ticks. So you'd be in at 06 if you get the retest failure. Short here, stop's gonna go 14 ticks above there. That's a lot of risk in bonds. It's $31 a contract, 31.25 a tick. They do have a micro bond thing, but it's not the same. You got to look it up. It's not the same correlation. It's really weird. It's like you're trading the interest rate. Look it up if you want to trade the micro. It's because it's not the same. 53, we got down to 40, 40.75. It's only 4.25 points out of here so far. Someone just swiped, a white snake too. Soybeans. Oh yeah, I forgot I was aggressive on this. Of course, I forgot to put it on my other accounts because I'm a moron. So remember, we shorted this aggressively because we were at the red lug, right? And we know this is a very bearish. Hey, look at that. Wow, I can't believe those lugs work perfectly. I've never seen that before. Or 10 times a day. So got through baby lug. I do not get out of VWAP unless it's confluent with something to get out of a couple. I'm not getting out of a couple here. So I will watch. This is an area where I'll get out of probably 3/4 of them. That would be extreme standard deviation of VWAP, between 1 and 2 standard deviation, and yellow lug. That's where I'll hold that to. It's another 12 cents. Other than that, I'll hold it until if I get a bullish signal, then I'll get out. This is, guys, if you have your process, you don't crap your pants every time the thing snaps back, right? You know your areas. That's what markets do. They rotate. It's algos. They're there to take your money for the people that can't handle the snapbacks. Yes, this feels great. I mean, it's not much, but whatever. Yeah, oh no, it's disappearing. I gotta get out. No, make it violate your areas, and or new setup, and or one of the reasons you get out. One of the reasons I get out is if that was a baby lug confluent with extreme standard deviation, I'd probably get out. You have to have your rules, and then you just sit in the trade. There's no like, it's not the world is against you doing this. It's just that's what markets do. And unless it violates important areas, it's probably going to do that, and then it'll do that. So just know your areas. If you get an opposing setup, then you get out. If not, sit in the trade. Turn this off. If you turn that, I've told you guys this 1,000 times. The day I turned off my P&L is the day I took off and started making millions of dollars. I mean, not that day, but when I did that and I just traded and I looked at the end of the day and I'd be like, oh my God, I'm up $90,000. I had no idea. Like you're aware of the first couple trades, but then you start to forget where you're at. And then you bring it up at the end of the day, you're like, holy, oh my God, right? Turn this off. If you make decisions based on this, you need to turn it off because you're not going to make it. That is number one, the number one thing I did when I finally took off as a trader. I turned off my P&L. And again, I say this to you guys all the time. You need to be with a broker that will stop you for the day, because I know what you're thinking. Well, what if I'm losing? I don't want to lose my whole account. Get with a broker that will automatically stop you out a predetermined limit. It should not be more than 5 to 6% of your account size for the day. So if you got a $10,000 account, the most you should lose is $600 in a day. I know it sounds small, but it will build up, and as you build your account, you can add size. If you do not obey that, you're going to blow out your account. And I've seen you guys, a lot of you guys say, well, my broker doesn't do that. If your broker does, there is so much competition out there. Why are you with that broker? Go with a broker. It's in your broker's best interest to do that for you, because if you're not trading, they're not making money on you commission-wise. So if your broker doesn't do it, you should be pulling out your money immediately and going to a broker that does it. And then you come up with a predetermined amount, say $1,000 or $600 or whatever. And you say, if my account hits this amount, you liquidate my positions and you shut me down until Globex opens the following evening. And then because I'm telling you guys, you've heard this all before. You sit there when you're calm and you're like, oh, I can, if I go down $600, I'll stop. No, you won't. It's very, very unlikely. You might do it a couple times, but there's going to be a time where you get emotional if you're competitive, which if you're a trader, you're probably ultra competitive, and you're going to get pissed off and you're going to like, screw this, I'm getting this money back. And then you turn around and you look and you lost 80% of your account value. Then you wake up the next morning and you're looking at your trades and you're like, what was I thinking? The problem is you weren't thinking, your emotions took over, and it's going to happen sooner or later. So prevent that. I'm telling you, this is why you're in this room, to learn from my good trades, my attributes, and my idiot moves, right? You don't have to go through 25 years of ass beatings to learn. Learn from me. Do this now, or you're going to blow out your account eventually. That's all I can tell you. I'm stopping right there so I don't go on another hour rant, because you guys have all heard it before if you've been on my prior webinars, especially like with Bookmap. But that is the number one thing you should do. Number one, set up your loss for the day with your broker. Number two, always be using the risk spreadsheet. Number three, I forgot number three. I just had it, I forgot it. But those two are the number one and number two that you should be doing. Oh, and then number three, turn off your P&L if you can't handle snapbacks, so on and so forth. That's my rant for now anyway. Hey, look, oh, here we go. Something to complain about. Look at that, wow. It's number one. It's crazy. I don't know how else to explain it. That's 85% of an ATR, still to the tick. It's just, this is what sets me off. I don't know if you guys know that. Either way, stopped out, made a decent profit on that, but it's just, I just sit here in amazement every day how that could be the exact tick. And you remember, I was at 75% of an ATR, changed to 80, changed to 85. I mean, how is that possible? Look at that. my curse. I gotta live with it. It's not fun. So this is something I don't understand what this, there's some bug in this icebergs on chart where I'll just start drawing this like this. What is this? Watch this. Like what is this? I haven't, no, first of all, that's probably why this is wrong. But usually when I do that, it doesn't change. See, it doesn't change. That's a bug. So kind of annoying. You can turn it off. They're definitely having problems with this on chart because the guy posted yesterday. Different computers are getting different. Somebody posted, you see this in here. Let's see. You guys should all be part of this room as well, so you can get, announcements. Let's see, I think it was in here. No, that's not it. I posted it yesterday. You guys saw it. Said it. Please send in your files or whatever. You can find that. I don't feel like looking for it right now. All right, guys, I've been on for an hour and a half. NG just retested again. Let's see. Really didn't want to draw this zone off of only 150. But let's see what it looks like. It obviously responded to it first time, right? There. There. So another thing too, like my auto trader, I guarantee there's people going on that, and probably some customers, some of you guys are customers of that, going on there and being like, well, what the hell? This is like, look at this. I just posted this recently because I finally got some data, but right, you look at this and you're like, well, that's nothing. Like, who cares? Like, he's making a couple $100. Guys, this is the amount to trade the auto trader is $12,000. Well, guess what? This is the size you can be trading. Like, what do you think that these numbers are going to be with a $12,000 account? I can't risk $2,000 on a trade, right? So again, this is trading, and I was actually very conservative in March, as you know, because of I didn't even trade a lot of the days because of the headlines. I'm not going to risk other people's money on some random ridiculous headline that could be true, not true, whatever, when you have no control over that, right? So that's been, but the point is, this is what the P&L, and then we gradually build up the P&L. So that's what I was showing you here. So the total P&L since the official inception, February 1st, is $678. So then you add 600. So again, this is based on a full size account. It's the same thing, trading micros. This is a $12,678 account, and you just make these micros. I'm risking 2% on a trade. That means on any trade that I take in the auto trader, I'm risking $253. If you're trading normal size with a $126,000 account, then you're risking $2,500, right? But the point is, I guarantee there's people looking at it like, well, that's making nothing. That's what you're going to make, because that's the risk. You can't be risking. I can't risk $1,000 or $2,000 on a trade. If I go on a bad streak, like yesterday, for instance, when I had a couple bad trades, I'll lose $4,000 of the account. Are people going to be happy with that? So, I mean, you got to understand, this is just perfect for you guys to see. If you have a $10,000 account, this is what you need to be. These are good days, right? It's like, these are good days. I didn't trade yesterday, but, and then you build it up. And as you build it up, you increase your size, and then that's when you use this. You change this. So my auto trader, I'm changing it every week, right? So every week we readjust this, and then that'll tell me my risk for each trade. And then you just follow your risk rules, follow your setup rules, and you trade like an algo. So that's something to pay attention to. All right, guys, nothing doing except for a stop to the tick, as usual there. No denying that the world is against me, the trading world is against me. I'm jinxed. So that was basically the only trade, right? But I would watch this. Actually, we're still alive in this one, right? Yeah, I mean, this has not gotten an ATR below here, so I'll still go long this. Yeah, only got about 4.5 points below here. And let's make sure this didn't 6.26, so we can change this. 80% is 5.32, so that's 5.5. We round up. That puts me at top of this zone is 57.5, 63. So I actually need to increase that by one. So if I get filled on that, my stop goes 80% or 5.5 points below the zone. If this gets 6.26, so 6.25 points, 6.5 points below the zone, then I will cancel this long. I'll wait for new lugs, and then I'll potentially go short. Could I show ES lugs? Yes. So remember, you guys, you have to go on there, you get a free 3 free day trial, and then you also get the benefits of the room discounts. You get like 4 to 6 products instead of 4, and grandfather pricing, and so on and so forth. These are the lugs. 45.51 is the blue lug right here. Really important level. This rips through here. We build new lugs. This is coming down to this at least. And if we get inside this, then we're coming down in here like we did the other day. And if we get inside here, we're coming down in here. If that gets outside of that, then we're coming down here. And that's what I think is going to happen. So we'll see. That's what I think is going to happen. Doesn't mean it's going to happen. That's my, but you see, I'll still go along, right? But I think it doesn't mean we can't pop and I can make a profit on it. But I think the bigger move is going to be down. So we'll see. And you let your real-time volume tell you, confirm it. All these stocks again. All right, guys, please post as you see. It helps everybody in the room, including me. You guys got me in a couple trades lately where I will get up and
Bondi Iceberg sells
Come back.
EB, 500 contracts.
so post, and then I'll do as well when I'm in front of my computer, and I will be back at 2 p.m. See you guys later.